Gold has always been a safe haven asset, which has been possibly correlated to negative events throughout the world, such as wars, which really makes this Israeli and the Palestine war somewhat of a positive driver for gold and for gold miners. So, gold miners are rallying today, especially as the Israel war kind of boosts the safe haven demand for the metal. Israel looks posed to launch a ground invasion of Gaza after its military issued a warning for more than 1 million Gaza residents to evacuate, and Iran's foreign minister hinted that Iran backed militants could open up another front if the war in Israel obviously escalates and Israel attacks. So this is positive news for gold, obviously negative news for the world, not trying to like kind of laugh about it, but unfortunately it's going to happen either way, and it's going to be a positive for safe haven assets such as gold. So that begs the question, what stocks will benefit the most from gold's potential rise? And I picked out three great stocks that you should be looking at. They all have solid dividends and they all have a price to book ratio which is under 1, meaning that the assets on their balance sheet are greater than the market cap of their company. So, really offers a great opportunity, and I'll go through that right now. So, when we look for Kinross Gold Corporation. I'll go through the financials and then I'll give a price prediction for each of these stocks once I'm kind of done with their financials. So I'll go over the financials quick here. So the PE right now is 13 times, which is below their 5-year average. So this company's trading at a discount relative to its 5-year average. Also, the PEG, the forward PEG ratio is 0.24, which is definitely a good number. The lower that number is, the better. If you don't know, that's price to earnings growth. And then the price to book ratio is at 0.99, meaning that the company's market cap is basically trading in parity with the assets on this company's balance sheet. So if this company were to go under, they could basically pay out the amount of their market cap just through the assets that they have on their balance sheet. So really, really interesting opportunity for this stock here. And then when we take a look at the growth metrics for this company, this company is growing at an extremely fast pace. So over the past 12 months, we've seen revenue grow at 45%, which is significantly above their 5-year average. So this company is growing at a faster rate than it has in the past. So that's awesome to see there, that this company is growing extremely fast. And then let's take a look at their profitability metrics. So we have a 47% gross profit margin, which for those that don't know, that basically is just revenue minus cost of goods sold. It tells you what a company makes for what it sells. So 47% is a good number as well. And the company does have 39 cents in cash per share. So that implies somewhat of a healthy balance sheet. So the financials look really good for this company. And we have a pretty solid dividend. So we have a 2.5% dividend yield, which is nothing to sneeze at in this market. So, 2.5% per year for owning this stock ain't too shabby. And then let's take a look at the chart and give a price prediction here. So, if we take a look, we can see that there is a resistance level at about $5.20, and we're coming up to test that level at this point in time. But I believe we could move through this level. If we get a move above this level, I think we'll likely move up to the next major resistance level at around $6.30. So, or $6.25, I should say. So not a random level here. This is where shares had topped out in April of 2022. So I believe we could see this stock continue to break out and move up to $6.30 over the coming weeks. And then our second stock here is Caledonia Mining Corporation, ticker CMCL. And their PE for the next 12 months is projected to be at about 20 times, which, yes, is above their 5-year average, but we're still below that general market PE. So that's definitely good to see. And once again, the market cap is worth less than the assets on its balance sheet. So the money investors are giving to this company is not as much as what their balance sheet, or actually what their book value which is the assets on their balance sheet, is worth. So that's awesome to see, right? So anytime you have a book value that's under one, it definitely implies that a company has really good value opportunity. Warren Buffett loves stocks that are under one price to book ratio. So I really do think that this is implying a value opportunity for CMCL. And then let's take a look at the revenue growth here. So not the best numbers. Kind of going to have to look through this number here. So we saw revenue decline 1% over the past 12 months. But what I do like to see is we're seeing that kind of reverse here. And we're seeing revenue be expected to jump 6% over the coming 12 months, which is definitely a positive. So seeing revenue turn around for this company. So that's good to see there. And then when we take a look at the profitability metrics, very solid as well. So we have a 42% gross profit margin, which is below the 5-year average of the company, but it's still a very good number. 42%, just telling you what a company makes for what it sells. Revenue minus cost of goods sold. That's a good number there. And then they have about 67 cents in cash per share. So that's roughly 6% of the market cap in cash per share, which implies safety in that balance sheet. And then when we take a look at the dividend yield here, we can see that this company has a dividend yield of 5.3%. So a 5% dividend is very solid and implies that this company is a really good opportunity, right? So you're going into a value name and you're getting paid every year 5%. Not too shabby. Let's take a look at the chart here for CMCL. So the chart doesn't look as clean as Kinross did, unfortunately, but we closed four daily candles above this 50-day moving average for the first time since April of this year, which does imply that momentum is turning somewhat bullish at this point in time. So good to see that there. And we just moved over resistance at around $10.60, which is where the stock had bottomed out in November of last year. Past support acts as new resistance. So glad to see that we moved above that resistance level there. So I think we likely get a continuation higher up to about $13 for this stock over the coming weeks. I picked this 13 level because this is where the 200-day moving average currently sits. So I think we get a nice clean move up to the 200-day moving average over the coming weeks for this stock. Obviously, we can move much higher, and I think the financials really do kind of provide an opportunity to move much higher. But when you consider the dividend, I think this stock is a really good one to own. And then let's take a look at B2 Gold. So ticker BTG here. So the PE is roughly 10 times, which is below their 5-year average of 15 times PE. So definitely a good number there. On a historical basis, this company is trading at a discount. So I'd like to see that. And it's also worth noting that the price to book ratio here is below 1. So once again, the book value of this company is eclipsing the value of the market cap, the value that investors are paying for this stock. So overall, good to see that the price to book value is under 1, which does imply that the stock is trading at a discount. So love to see all of that there. And then another thing I should note here is that we have a 5.1% dividend yield. So once again, high dividend yield, great value. I like this company. And then revenue growth has been pretty solid as well. So we have revenue growth of 8% over the past 12 months. And for the next 12 months, we're projected to have roughly 1% of revenue growth. So revenue growth looks solid on this stock as well. And then let's take a look at the profitability metrics. So the profitability metrics are the best out of any of the companies that we just covered here. So we have a 60% gross profit margin and a 15% net income margin. So both really good numbers, hence the A+ grades from Seeking Alpha here. So very good to see there. And then we have about roughly 40 cents in cash per share, which is a little bit over 10% of the market cap in cash per share. So, good number there. And then, like I said, the dividend of 5.1% is very attractive. And then let's take a look at the chart here and give a price prediction. So we're coming up to test resistance at around $3.30, which is where the stock had topped out in September. It's also where the stock had bottomed in March and February of this year. So past support acts as new resistance. We saw that here earlier in the month, and we could see that level act as resistance once again once it's tested at around $3.30. But it's worth noting that we've closed 3 daily candles above this 50-day moving average for the first time since May. So once again, similar to CMCL, we're seeing momentum start to turn around for the stock, which should act as a positive. I believe we likely get a move up to the 200-day moving average at around $3.60 over the coming weeks, which would obviously be roughly 15% gain for the stock. And then if we're able to overcome the 200-day moving average, I think we could see a larger move higher up to about what's this level? Up to about $4.60. I picked that level as this is where we saw some consolidation in the past. It's where we saw the stock consolidate in 2021 and in 2020. So I think we could get up to that longer term resistance level if we're able to climb over the 200-day moving average. The higher confidence projection I have for this price is that we move up to the 200-day moving average at around $3.60. So that's what I'm seeing for these stocks. Like I said, every stock that I covered today, I see as a really good long-term hold because we're seeing a price to book ratio of 1 or below. We're seeing decent growth rates. We're seeing good dividends as well, which is really important in this current stock market environment. So with all that being said, I think gold likely continues higher as well, which should help propel all of these stocks higher. So I hope you enjoyed the video. If you did, please leave a like and subscribe. I'll see you here next time.
Looking to learn more about the financial markets? Well, I just released a new course that will teach you everything you need to know about the stock market. You can find that at happyinvestingtoday.com. Also on the site, you can purchase one-on-one coaching sessions where I will break down your portfolio, and to better assist traders when searching for setups, I'm selling trading bots, which will tell you how your trading strategy has performed historically on a stock, crypto, or currency that you are researching. If you would also like to see what me and my experienced trading team are doing on a day-to-day basis, join our Discord, which is linked below, for a free 7-day trial. With that being said, please leave a like and subscribe. Appreciate you watching this video.